Welcome to the deep dive. Today, well, we're talking about something huge for a lot of you. Owning a home. That dream feels real, right? But saving that down payment.
Yeah, that can feel like a really steep climb. It's often, the biggest hurdle people mention. Seems almost impossible sometimes.
Totally. So in this deep dive, we're looking at a specific guide, one from Penny Nest. It's called Smart and Effective Ways to Save for a House Down Payment Faster.
Right.
Our goal here is to really unpack it, pull out the most practical stuff, things you can actually do now to build up that savings and, well, make that home ownership dream feel a bit closer.
And the guide kicks off with something really important, I think.
Yeah.
It says, look, saving's a big deal, yes, but with the right plan, the right strategies, it's definitely doable.
Okay, good. So let's get into it. The guide starts with the basics, like why even bother with a down payment? What's the point beyond just having some skin in the game?
Well, they lay it out pretty clearly. It lowers your total loan amount. Simple enough, right? And that means smaller monthly payments.
Makes sense.
Plus, it can help you dodge PMI, that's private mortgage insurance.
Yeah.
You usually pay that if you put down less than 20% on a conventional loan.
Ah, right. The extra
Yes.
cost.
Exactly. And, you build equity faster, maybe even get a slightly better interest rate. Lots of benefits.
Okay, and you mentioned 20%. The guide actually calls that the 20% myth, doesn't it? Says it's not the only way.
Yeah, and that's a huge point they stress. 20% is great if you can, but it's not mandatory. They highlight other options like conventional loans, sometimes starting at just 3% or 5% down.
8%? Okay, that's different.
Definitely. And FHA loans, those are government-backed, often around 3.5%. And then you have VA loans for veterans or USDA loans for like rural areas. Sometimes those are even 0% down if you qualify.
Wow. Okay, so knowing those options exist is like a big first step. Good to know. Now, before getting into the saving part, the guide flags something else. Don't forget the other costs, right?
Absolute critical point, closing costs. They stress this. These are totally separate from the down payment.
And they can add up.
Oh, yeah. The guide says expect maybe another 2% to 5%, sometimes even more, of the actual loan amount. So you need to budget that in too. It's a real chunk of cash.
Got it. Okay, so we know why save. We know roughly what to aim for, including those extra costs. Now, how does Penny Nest say we can actually save faster? What are the strategies?
So they start with what they call foundational stuff. Step 1, budgeting and tracking meticulously.
Okay, like really know where your money goes.
Exactly. You can't optimize savings if you're flying blind, basically.
Makes sense. Then what?
Step 2 is setting a SMART goal. Specific, measurable, achievable, relevant, time-bound. It helps break down that huge down payment number into like manageable monthly targets.
Yeah, less overwhelming that way.
And then maybe the most powerful one they mentioned early on.
Yeah.
Automate your savings.
Ah, the pay yourself first idea.
Precisely. Set up automatic transfers to your savings account right after payday. It ensures consistency, and honestly, it just removes the temptation to spend it. Out of sight, out of mind, kind of.
I can see why they call this foundational. Okay, building on that, what about strategies for a bigger impact, maybe faster results?
Right, so they talk about tackling the small stuff, the latte factor, as it's sometimes called. Those small, regular expenses.
Like coffees, subscriptions, lunches out?
Exactly. They argue that cutting back on those, even a little, adds up way more than you'd think over, say, a year or two. Easy wins, potentially.
Okay, so small leaks sink ships. And what about the other side? Earning more.
Oh yeah, they're big on actively boosting income. Side hustles, freelance work, maybe selling stuff you don't need. Every extra dollar from that goes straight into the down payment fund. That can really accelerate things.
Direct fuel for the savings goal.
Yeah.
Makes sense.
And another big one they highlight. Look into first-time homebuyer programs and grants. Seriously.
Like assistance programs.
Yeah. Local, state, federal sometimes. The guide points out these can offer thousands of dollars. Money you don't have to save yourself. Worth researching for sure.
That could be huge. Okay, so you're maybe earning extra. Where should you actually keep this growing down payment fund according to the guide?
Their strong recommendation. A high-yield savings account. An HYSA.
Why specifically that?
Well, a few reasons. It's safe, FDIC insured, usually. It's liquid, meaning you can get the money out easily when you need it for the house. And importantly, it earns more interest than a typical basic savings account. Not a ton, maybe, but every bit helps.
Gotcha. And they specifically advise against something too, right? Like, don't put this money in stock market.
Yes, they're quite clear on that. For short-term goals, like a down payment needed in, say, the next few years, the risk is just too high. Imagine the market drops right when you need to buy.
Yeah, that would be devastating. So safety first for this money.
Safety and accessibility are key here.
Okay, one last really crucial piece they emphasize. While you're doing all this saving, you also need to be working on your
Credit score. They say it's important as, quote, extreme.
extreme. Wow, why?
Because a good score isn't just about getting approved for the mortgage in the first place. It heavily influences your interest rate. And a lower rate, as the guide points out, can save you, potentially tens of thousands of dollars over the life of the loan.
So it's not just about saving for the house, but saving on the house long term.
Exactly. It's a massive factor.
All right, so quick recap. We've looked at why down payments matter, busted that 20% myth, flagged those closing costs, covered foundational strategies like budgeting and automating, plus accelerators like cutting small costs and boosting income.
Explored assistance programs, talked about using HYSAs for safety, and hit hard on the massive importance of your credit score. All straight from this penniness guide.
Yeah, a lot of ground covered.
And the guide's final word is really encouraging. I think it takes focus, it takes discipline, no doubt. But using these kinds of strategies, it really does put home ownership within reach for a lot of determined people.
Definitely. And it leaves us with an interesting question to chew on, something the source kind of hints at. Is it better to jump in sooner with a smaller down payment, maybe pay PMI for a while, or wait longer, potentially years, to hit that 20% mark?
That's a tough one, because while you're saving longer, home prices could go up, interest rates could change.
Right. So how do you balance your own savings ability and your timeline against what the market might do? That's a really personal calculation you'll need to make.
It really is. Hopefully, keeping these insights in mind helps you figure out your best path forward.